But you would have exposure to gilts as well, to the gilts market in the United Kingdom. And, obviously the word on the street was that the gilts used for collateral was sold in a jiffy. And so the chaos was overnight. The expectation is that it would settle in a matter of the next few weeks. Do you see that happening?
I see it settling as well. So I think the power of the central bank is sufficient, I think, to make it settle down. Again, we could have gilts positions in our treasuries portfolio from an asset perspective, but from a liability hedging perspective, we have positions linked to the European swap curve, and that's mainly Germany, the Netherlands, positions like that. So there's not a lot of hedging activity linked to UK gilts.
What also came to light with this episode was the fact that a lot of pension funds had levered positions on longer duration bonds, right, in their essentially liability-driven investment funds. And so talk to us a little bit about the kind of positions, the kind of exposure that pension funds have to the fixed income market, because I know in normal times that would be a safe place to hide, but right now with the kind of volatility that we're seeing and the unpredictability out there in the macro environment, you could be in for a rude shock.
Just to understand, I think a pension fund project is something in between a regular asset management position and an insurance project. So one would say that you would expect roughly half of that being hedged, and that's why many pension funds have positions in treasuries or interest rate swaps. That indeed the main purpose of that is hedging, safety, to be able to remain liquidity, and in situations like that is at risk. Usually it's not at risk for the long term, but for the short term. That's also a reason we called for maybe access to central bank, so maybe the ECB in our situation, to be able to have a liquidity provider there as well. Like regular banks have. Banks have access to ECB for their liquidity. We think, and we're talking about that for years, that should also be a good idea to be arranged for pension funds, because then you have directly solved it. Now the central bank intervention is more indirectly, because of the difficult situation in the UK. The central bank came in for support to make sure that assets would not be wiped out and that they can still guarantee pension payment. But I think access to a central bank directly would be a better solution.
Hi, I'm Emily Tan, and thanks for watching CNBC. You can check out more of our videos by clicking on the boxes on the screen, and don't forget to subscribe to the channel for more. Thanks for watching.